If I asked you who creates money in the United States, you'd probably say the government. Or maybe, if you've done some reading, the central bank. You would be incomplete. Because what we call money today isn't mostly paper. It's numbers, entries on ledgers, digital promises moving at the speed of light. Yes, physical dollars are printed, but that's only a small slice of the system. So who creates the money you use to buy a home, start a business, or pay for coffee? The answer lives inside a machine that's neither fully public nor fully private. A system where money isn't an asset, it's debt. Today, we're opening the hood of America's financial engine and finding out who really holds the lever. Chapter 1. The Manager, Federal Reserve. The Federal Reserve is often misunderstood. Some say it's private, others say it's government. The truth is more complex. The Fed is a hybrid system made up of 12 regional banks and a central board of governors in Washington. The board's members are appointed by the president and confirmed by the Senate. They set monetary policy. The regional banks interact with commercial banks every day. This structure was created to balance politics with financial stability. The Fed doesn't decide who gets mortgages. It doesn't hand out business loans. What it does control is the price of money, interest rates, and the level of reserves in the banking system. Think of the Fed not as the engine, but as the mechanic. It adjusts conditions, but it cannot force banks to lend. Chapter 2. The real printers. Commercial banks. Here's the part most people never learn. In modern America, most money is created inside private banks, not by printing, by lending. When you take out a mortgage, the bank doesn't move money from someone else's savings. It simply types numbers into your account. At that moment, new money exists. Loans create deposits. That's not a metaphor. That's how the system works. Your promise to repay becomes the foundation of new money. This means commercial banks largely decide which industries grow, which neighborhoods get credit, which businesses survive. They don't control interest rates, but they do control allocation. And allocation is power. If the Fed is the mechanic, commercial banks are the drivers. Chapter 3. Public currency versus digital reality. Physical dollars are produced by the U.S. Treasury. They print bills, they mint coins, but cash makes up only a small fraction of what we actually use. Most money lives as bank deposits, invisible, programmable, and dependent on credit. Chapter 4. Markets beneath the surface. Beyond everyday banking exists another layer: short-term funding markets, overnight lending, global dollar flows. Huge institutions trade U.S. Treasury bonds for cash every day to manage liquidity. Trillions move quietly through these pipes. Some U.S. dollars even live offshore in foreign banks, circulating globally outside direct domestic regulation. These systems are tightly connected. When they freeze, the Fed steps in to stabilize them. Not to save individuals, to keep the machine running. Because when confidence breaks at the top, shockwaves travel fast to the bottom. Chapter 5. The Turning Point. In 1971, President Richard Nixon ended the dollar's direct link to gold. From that moment on, the US dollar became a fiat currency, its value no longer tied to metal, only to government credibility and global belief. Money became trust. Conclusion: the hierarchy of power. So, who controls money? Not one person, not one institution. It's a hierarchy. Commercial banks control volume by deciding how much to lend. The Federal Reserve controls cost by setting interest rates and liquidity. The Treasury supplies collateral, issuing government debt that anchors the system. But above all of it, is confidence. The dollar works because the world believes. The US can pay its debts. Inflation can be managed. The system will hold. Money isn't something you own. It's a scorecard of who owes what to whom. And right now, the game is played by giants, while most of us simply hold the chips. Subscribe for the next breakdown.